Hello everybody and welcome back to Cryptic Humility. As always, I'm going to put the top 10 cryptocurrencies on the screen and their pricing here for your review. We are experiencing a little bit of a downturn in the crypto space. I covered it a few weeks ago, why the government shutdown may be affecting crypto. You might just have to go a couple episodes back to find that, but if you're interested in why we're experiencing a downturn in the crypto space, make sure to check out that video on my page. Two things before we start. Number one is we definitely need to start getting more statistics on here for the podcast. I want to start sharing statistics in AI and fintech, like how many fintech companies are being created in the US every single year now, or, who is the top crypto country, which obviously we know it's the United States, baby. Also, getting into this week's news event, if you are a Boston local, if you are a Boston resident, I am a New Englander myself. We actually heard some news of a mistrial this month for two brothers that went to MIT. So in May of 2024, now before we get into this, I need you guys to understand with me that this was pre-regulated crypto. This was pre-Trump. So, and as we know, the SEC was coming after a lot of companies for not registering correctly with the SEC in regards to crypto companies and cryptocurrencies at that. So this was a tougher time for crypto. There wasn't a lot of acceptance. Banks didn't even offer you to open a bank account. We've talked about that before on the podcast. But anyways, we're going to be getting into why this happened. But before we do that, the jury cannot decide on a verdict. And I partially think that's because of how drastically things have changed from 2024 to 2025, especially with crypto. We have seen a massive overturn, not only just in regulation in this administration, but also acceptance. And now we're the number one country in the world for crypto, like to date. So here's what happened in this case. As we know, Ethereum uses proof of stake consensus mechanism. Consensus mechanisms are the ways in which we remain decentralized while still being on a blockchain. Proof of stake is validators being chosen at random. So sometimes if you're staking so much or you're placing so much money into Ethereum's blockchain, for example, you might get chosen as a validator because you have so much skin in the game and so much risk in the game. You then can receive benefits by becoming a validator and keeping the platform and the ecosystem peaceful, if you will. On Ethereum's network, there is a company called Flashbots, and they created the MEV Boost. Now, MEV Boost is an open source neutral software that allows validators to rent out some of the space that they have to builders interested in building on Ethereum's blockchain. In return of doing that, they actually increase their chances of getting higher benefits and higher staking rewards. So how does this all tie together? So these two brothers from MIT are being persecuted because the persecution believes that they manipulated and found vulnerabilities within the MEV Boost software to high-speed bait and switch investors. High-speed bait and switch often happens in initial coin offerings in the crypto space, and obviously I'm saying that unfortunately because we try to prevent scams that happen in this space, but essentially when you have expectation of a coin or a project or a company in the crypto space is going to 10x and this initial coin offerings coming out and you have so many expectations for it and you participate in this, it's easy then for the manipulator, for the person that's enticing you into this investment to take their mask off and really show you that this product isn't as valuable as it could be, and there's no true value in investing in it. So essentially, it's easy to trap investors into the opportunity, and then the harsh reality comes to light when it's too late. Last week, we talked about how Trump had pardoned the former CEO of Binance, and we talked about too that he has pardoned quite a bit of people in the crypto space. I'd love to hear what your thoughts are on that. Again, this is all happening pre-regulated crypto. This is happening when there really were no guidelines, no rules, no compliance, no anti-money laundering, there were no bit licenses yet. And I know that this was only a year ago, but what guidelines were they really supposed to follow? And I think that's what the jury is deciding. But also there is concerns that they were tampering and altering with the actual software that keeps the platform fair and decentralized. for all the users. If you are interested in keeping up with this case, please let me know, leave a comment below, and I will definitely keep you in the loop. I know that they probably are going to retrial and open this trial again in the future, so I will definitely keep you posted on that if you're interested and if you're a local Bostonian. Next person, or next news event, I should say, that we're going to be talking about is Roman Novak. Roman Novak was a crypto multimillionaire that lived in the far land of Dubai. And let me tell you, we're going to come back to Dubai. And this is a main reason why I want to do a lot of the statistics in crypto and show you guys, is because it often feels like Dubai is like the crypto land, like where all the crypto investors go. But it's somewhat dystopian in my opinion. But anyways, him and his wife were found dead this past week. What had happened is he was getting involved with some business deals, and I'm saying business deals very lightly because he had been involved in embezzlement in the past, and he actually had been imprisoned for embezzlement in the past. And the other thing is that he was posting a lot on social media about his wealth, about his lifestyle, you know, so obviously that's gonna gain a lot of attention. But he had a lot of people investing into his coins. He was really good at manipulating people to invest into his cryptocurrency and his projects that he was working on. He set out with his wife for a business deal, and what had happened is they were off in the mountains of Dubai, and it basically was a setup and a trap. And these three people were, well, they have three suspects right now. They're not sure if these are the true people, but they believe that three people took them for ransom and were demanding like 200,000 in crypto, because through his phone he was texting his clients and his contacts at the time saying, I need 200,000 in crypto, please. They were asking him for his digital wallet, and they found that he had nothing in his digital wallet. So I don't know if he transferred it or had a separate wallet or had a cold wallet, for example, that he wasn't, you know, sharing with them. So they didn't find anything on him, but then that led to him reaching out to help for other people because those individuals, those suspects, wouldn't let them go. But I will just say that if you are around the wrong crowd, of course you're eventually going to run into trouble. And I think that unfortunately was his situation. But like I said, we definitely need to cover more things with Dubai, because there's a lot of like crypto hype around Dubai. You know, a lot of crypto millionaires and billionaires are in Dubai, and I really want to dissect that and figure out the truth on that. So we will next episode. Last piece of news that we need to talk about, and I actually covered this on one of the live interviews this past week. I don't have the film yet. It's actually going to be for December, but I want to introduce the home robot to you guys if you don't already know it, and it's called Neo. Now, I'm going to link the website down below so you can check this out, and I really truly just want to hear everybody's thoughts about it. But Neo is an AI bot, like an actual size human robot that can come into your house and be programmed to do all your chores for you, whether that be folding laundry, putting certain things away, I don't know, whatever, you know, whatever your household, washing the dishes, I guess. It's a really, really crazy concept. The whole point of this robot, and you can check this out on their website, but the whole point of the Neo robot is to make AI as a more holistic view for everybody, a more friendly approach to AI. Now, I have seen the bot, like the actual bot, and I'm going to tell you, it doesn't look super friendly. I think that's the biggest fear with people with the AI bots, is that they think they're gonna like be malprogrammed and like switch off and like, you know, turn off their human switch and like go evil on us. In all the live interviews that we've done, I've found it to be fascinating how many people can conversate with me about AI. I think because it's so heavily in our social media now, it's ChatGPT, it's like, it's so integrated that people have enough awareness because it affects their daily life to be able to comment on it, compared to talking about crypto. Because anybody I go up to on the street to talk about crypto, almost nobody has any real knowledge about it. So going back to Neo the robot, I do not think we should fear AI. I think we should welcome it. Of course, we have to be smart about the regulations and the practices. I think there need to be rules. I've talked about subbed before on the platform, on the show, and I can't get into details about it, but you know, you can look it up. Websites like Sub should absolutely be banned from the AI space. I think that is something that really truly limits the space. Before we get to our guest speaker, somebody on the street for our live interviews asked me what I thought about digital IDs. Now, at first glance, I could say that this is a really bad idea because as technology is advancing, it could be so much easier for people to duplicate their ID. But at the same time, how long have people been doing that with just regular IDs, underage drinking and stuff like that? So I want to say that I am open to the thought of digital IDs. I do think there needs to be extremely strict protocols in regards to managing and making this happen. But I mean, just like how I would go to CVS to tap my phone and pay my card, I never even bring my wallet anymore. I don't even take out my wallet. Actually, I have to bring my wallet everywhere because it has my ID. So I'm open to this process, but I think that we also have to pay attention to how dangerous it could be with scams and hacks, and especially with immigration and like how that would work in traveling and stuff. So somebody did ask me that, and those are kind of my thoughts right now. I've got to do some more investigating into that. So maybe that'll be another topic that we talk about next week. Okay, let's get to our guest speaker. I want to welcome Guillaume onto the podcast. Guillaume runs Panoptic. Today we're going to be talking about options, perpetual options, and Guillaume is one of the first in the industry to be doing this, so I'm very grateful to have him on the show. He's going to be teaching us and walking us through this process. So I would pause if you are not familiar yet with Ethereum, blockchain, and also Uniswap. I think those two things are really good to know before you watch this episode as well. So if you want to, pause, we did do an episode on Ethereum. We do cover Uniswap as well before we get to this guest speaker. So without further ado, let's bring him on now. I am here with Guillaume, and Guillaume has a semi-new business in the crypto space, new to us, not new to Guillaume, but he is going to be teaching us a lot to do with options trading, not traditional options trading, but a new advancement in options trading in the DeFi space. There's a lot that we're going to be covering today, so I'm going to do my best to ask the right questions for anybody that's new out here to get a deeper understanding of what this opportunity actually is for our community in crypto. So Guillaume, I want to welcome you onto the show. Feel free to get into your background and kind of just to start us off, give us a gist of why you're in the crypto space today.
Yeah, sure. Thanks, Vanessa. Thanks for the invitation. Yeah, I'm Giullaume Lambert. I'm the head of a company called Panoptic, and we do options. But yeah, my background is quite different. I used to be in academia. So I was actually doing undergrad in physics, PhD, postdocs in physics. I was an assistant professor even at Cornell University in applied physics. And my research was not about finance at all. It was about biophysics. I was looking at cells. I was looking at antibiotic resistance, and physicists sometimes are arrogant. So we thought, all right, we can solve some of these issues and using math or microscope. So this is a bit how I was using it. And it was what I was doing till, again, a few years ago. And in parallel, again, being a physicist, I was using math in my research. And that math, in a weird way, can be applied to finance. And the way you think about this, if you have a molecule moving in a cell, for instance, you can model this with some equations, and the same equations that describe how a molecule is kind of moving around by being bombarded by like water molecules and other thermal movements, you can apply this to options pricing. And the price of an asset, could be a cryptocurrency, could be Apple stock, can be modeled by a similar math. Same formula, it's just a different system. So when you know about, this is the diffusion equation, this is a quite straightforward problem that physicists apply to materials, to molecules, but applied to finance has now kind of trillions of dollars worth of impact. And I was able to use some of that, and I was trading options in TradFi. GameStop I stayed away from, but overall, just for fun, trying to trade options. I knew the math, I knew the probabilities. It was kind of a good engaging aspect of it. So physicist, part-time options trader, and also somewhat blockchain enthusiast. So I was following the development of the blockchain. Ethereum, I got into in 2016. So very, very kind of passionate about the technology, passionate about the apps. It's only when Uniswap came out and Make Your DAO, I guess, for those that have been around. But in 2018, 2019, you started to see real applications. It was kind of cool. And Uniswap launched. I was happy to be an LP in Uniswap V1, V2. And I was also doing this in my spare time, maybe during the summer months when academia was a bit more quiet. But so I was always at the forefront of technology in my research, and also I was at the forefront in any technology, including blockchain. And Yeah.
No, I was going to say that. So, first of all, I was going to say that I really do need to start running a statistic of how many people have come on the show and have, I mean, I understand that you did options trading kind of like as a hobby, I guess, to start, or maybe just something that you were passionate about outside of your line of work. But there's so many people that I talk to in the space that are really self-taught just through their own curiosity of the technology. Or I know options trading has been around for so long, but expanding that into the DeFi space, which we're going to be obviously talking so much about today. I just find it so interesting how many people, like, I've talked to somebody on the show that was into like geography and ended up into crypto. I myself, I started in the FX market, so it's a little bit like closer to crypto, if you would say.
It's very close, yeah.
Yeah, I just
And what were you doing in the FX markets?
Oh God. So I tell a lot of people who listen to the show have heard this 1,000 times, but I will tell you. So I started FX day trading, and actually, so this is great to build off of. So the reason why I started Cryptic Humility, since we didn't originally talk at first, I talked to Steve. Mm-hmm. So the reason why I started Cryptic Humility is because I fell into a pyramid scheme where somebody was trying to teach me how to pass passive trades using AI. So using technology to build out trades for you, and in return you receive income. So great concept, loved the concept, but the company that I was working with was just a huge pyramid scheme. The person that I worked with was illegit. I lost money in the process, and that kind of in a way ruined my outlook on the FX market for a little bit. So when I was in college, I did a directed study in crypto. I did a lot of research into this, and obviously now I interview people and learn more about the space every single day. But that's how I got into crypto, is because I actually fell to a scam and some fraudulent company in the FX market. And
so crypto seemed like the safe choice back then.
I mean, this is like pre-regulated crypto. This is like when crypto. So I went to Bryant University in Rhode Island. Where are you? Are you in the United States or?
Yeah, I'm based in Boston actually.
Oh, okay, yeah, I'm 20 minutes north of Boston. So okay,
interesting.
Yeah, we're in the same area.
Same zip code. No, okay, yeah, but.
Are you my neighbor or no? But so long story short, I just did a lot of research and trying to learn about the crypto space correctly, and at Bryant University there wasn't any classes that I could take about crypto. So I would say that crypto intrigued me more, but also I more so saw that these fraudulent things were absolutely going to be happening in the crypto space as well, which is where my area of interest lies, is protecting people, cybersecurity in the crypto space, raising awareness, which we'll do at the end of this podcast episode. But anyways, let's stay on track. So my first question to you that I think will help build this out for people that are watching is, obviously we are moving towards DeFi. And in moving towards DeFi, traditional options are changing. So I want to ask you first, what is different now with options trading? You know, now as we're moving towards DeFi, what are some of the differences that you're seeing? And I know Panoptic, we're going to be mainly talking about Panoptic today, so you can reference that. But my first thing is maybe what are options trading briefly, and how is it different now with DeFi?
Options trading, a lot of folks may be familiar with GameStop, which was buying call options on a ridiculous strike. It turns out that you could buy, the price was maybe $50, $60 on GameStop, and you can buy $1,000 options, meaning that you only made money if the price was above 1,000 or 1,001. And in a weird way, even though it was a unlikely scenario, it was a self-fulfilling prophecy, because the market makers on the other side had to manage that risk. They had to say, maybe it's a 1% chance of happening, but even then I have to maybe manage my risk, and they would be pushing the price upwards. There's a kind of a pin risk that happens. The more a market maker needs to hedge, the more it pushes the price up. So a lot of folks may be kind of on the buy side of options, trying to stick it to the man with AMC, GameStop, Hertz. There's a bunch of meme coins. But at the end of the day, this is what retail was exposed to. And now we have zero DTE options, which are options that expire within a day or in less than a day for now. It's very good for speculation. And the key point about options, it's leveraged. So you can put maybe $400 worth of collateral or amount to need to buy an option. And this effectively controls hundreds of thousands of dollars of notional. So it's quite leveraged. People may know about perps or futures, even in FX trading. I'm sure you're trading on margin, but this is also a different way to do leverage. You have less risks, meaning that you don't get liquidated if you're wrong. You just lose the money you put up front. If you're right, you can make a lot of money. So a lot of the current TradFi options traders at the retail level mostly buy options. They do this, could be shorter dated, could be medium term, and then it drives a lot of the flow. But historically, options have been around for 100 years, and it was more for risk management historically, which was you produce corn, you don't know what the weather is going to be like 3 months from now, so I can secure the right to sell my corn at a price. And if I get to exercise that option to sell, then I can make more money. If the price is different, or if I can make more money by selling it on the open market, I just leave that option out. I don't exercise it. A lot of that is options are traded in Chicago because this is where the agricultural center was. And historically, it's still there quite a bit. So options are in Chicago, stocks are in New York. But the whole need of options is for risk management, hedging, offsetting risk. You can be a bank that needs to protect against a economic collapse, or you can be some other company that needs to generate cash flow. You can use options for this. And it's quite large. The notional value, the amount of value traded in options is much larger than what you have in spot trading markets. And that's the part of it is leverage, but also it's part of it that you spend a little bit to get an outside protection in a way. And this is how the leverage comes in. If you want to do this in crypto, now you have to maybe reinvent the wheel a little bit. Because if you want to do this for an asset like Bitcoin or Ethereum, it's quite simple to do. You just need to set the rules, set the expiry. If it's above that price at that time, you get to exercise. So it's quite simple and straightforward to re-implement options from traditional finance to crypto or to Ethereum, for instance. But the key point is that it hasn't really gotten traction. It's not as attractive, one, for speculative purposes, and two, for management of risks. You can speculate much more easily with perps, and you can also manage risk in a different way, mostly off-chain or even in centralized exchanges. So historically, options have been quite hard to have had a tough time gaining traction in crypto. Because of that, it's too slow for perp traders to make money, but also not mature enough for hedgers or people that want to manage risk to use.
I was going to say that because you're actually the first person that has come on and the first company that's come on that has this idea, which I love. It's very innovative, and I love to, showcase you and put you in the spotlight for this position. Let me ask you, so if somebody is new to trading, for example, are you going to suggest options trading to them? Did you build up to that, or did you just start in options? Like, what is your recommendation before we go any further?
Yeah, options are I love them. Personally, maybe I love them too much, but it's not black and white. You can be wrong and make money, or you can be right and maybe lose money. It's a balancing act, which I like. You have to understand the theory a little bit. You have to understand what's in front of you. But once you get this, then again, I trade options still in TradFi. I was at Panoptic. I'm trading a lot of options there too because it's fun, because I like it. But it's definitely not for everyone, because you have to know it's a bit more active. You have to be able to watch your positions once or twice a day, actually. It's not that bad, but you have to do it consistently. If you walk away for a week, then you can get in trouble.
Oh, yeah.
And then in a way that if you buy some tokens, then yes, it goes up or down. You don't look for profit potential if you want. You just want to hold this for as long as you want. So it's two different ways of trading. As an options trader, yes, you can buy options, which is this speculative way, but I'm mostly selling option. And selling options has a lot more risks. If it goes wrong, it can hurt you very badly. And people call this picking up nickels in front of a steamroller. Because you make a little bit of money, and then every once in a while you trip, and then you lose months worth of profits. So it's definitely a balancing act, mostly for advanced users. Market makers, they have two teams, one that does spot trading, one that does options trading. Same thing in FX. You have FX traders on the currency themselves, FX traders on the options. It's two different floors of the building, two different offices. They approach this in a different way. And if you're a beginner, but you're interested in a challenge, you could start with options, kind of going through the ropes. But yes, the use case for options is mostly for these larger, well-capitalized individuals, or in my case, those that enjoy that. They get the sense of balancing a portfolio.
Yes, no, that's perfect. That's perfect. I wanted to give people a background of options before we dive even deeper, because if you don't understand the foundation of this as we get into DeFi, because we're gonna be uncovering a couple other terms too that Guillaume will explain to us, but with Panoptic involved in that. So I just want to make sure that people had that foundational level of information. I'll also, as people are listening, they'll probably have already seen it, but I'll put some stuff up on the screen, some examples to kind of help them paint a deeper picture of what you're talking about. So I appreciate you explaining that. Let me ask you now, as we're getting into Panoptic, because correct me if I'm wrong, but Panoptic is doing perpetual options, correct?
That is correct.
Okay. So
First one to do it. Yes.
No, and you guys are on Ethereum's network on the blockchain. Okay. So I think a couple other things that people need to understand before we you dive into talking about your business is, so the concept of liquidity providers and also automatic market makers. So if you can you explain these concepts and kind of how they go hand in hand so the audience can understand?
Yeah. Folks that have been in the blockchain or DeFi for a long enough time probably know about Uniswap, or the way that you can trade a token. And when Uniswap came out, it was quite drastic, where you can trade any tokens. You can buy and sell them without having to wait for a market maker to kind of give you a quote. You do a interaction with a smart contract to buy and sell tokens. Initially, it was the maker token and the uni token and all of that. But now the meme coin launches on that fund, all of those, they use an AMM in the back to make the trading easier without having a human component to it. The AMM, automated market maker. You don't need a entity or a team that does the market making. It's a smart contract that will provide you tokens. You say, I want to have X amount of token. They give it to you. There's no spread. There's no decision. It's just always happening. It always works if there's not enough slippage. So that is just a different way of trading. You have order books based, like in New York Stock Exchange is people that trade. I want to buy, you want to sell, let's meet in the middle. It used to be a bunch of guys shouting in a pit trying to find their fill. People do it on a computer now, or even like private channels or even Telegram, but it always has to have a counterparty. You buy, I sell, you buy. AMMs is just a different way. There's no intermediary. It's a smart contract that can effectuates that trade. And you don't have to worry about, is the other one going to pay me at the end of the day or 2 days from now, like T+2? It used to be, it's happening now, you get your funds, and it's quite simple. So Uniswap V1, Uniswap V2, V3, and now V4, they all have this model of, let's make trading, swapping easy by changing how swaps happen. No need for intermediary. You have a peer-to protocol. You just interact with the protocol to get your tokens that you want. So this is one step. Most of your users that want to swap, they go on, again, pump that fund. You can swap there, and same thing with Uniswap. That's one aspect. The flip side of AMMs, you don't have a market maker. You don't have an entity that actively kind of provides prices, but you have a different role. This role is called a liquidity provider. This is a bit more passive. This is users that just provide capital. They say, I'm going to be allowing the protocol to use my tokens. People will trade with these two tokens, and depending on the price, after 1 month, 1 day, or 1 year even, I will get different amounts of tokens. And typically you want to have more tokens back than what you put in.
Right.
And as people trade, they pay you a fee. But at the end of the day, this is just another role that not a lot of people do, but then those that do it can do it in a way that is a little bit more complicated. But liquidity providers is what makes trading happen for everyone else that wants to trade.
Right.
So far, so good?
No, so far so good. No, you're doing great. You're doing great. No, but I want to build off that too, to say that, because in doing my own research in this, I was like, liquidity providers and AMMs, how do they go hand in hand with each other? So going off of what you said, liquidity providers are helping AMMs be able to balance out the ecosystem of people placing trades. And let me ask you this. So let's say that this, we're building a new D app on Ethereum's interface, and if we don't have enough people doing trades every single day, isn't that also the function of AMMs, is to continuously provide that liquidity even if there isn't that much movement? Of course, liquidity providers are helping that process, but isn't that kind of their role now, is to make sure that there's always a constant balance in the ecosystem of people buying and selling and trading?
Yeah, and at the end of the day, those buyers and sellers, they still need to see their orders be filled in a way. If they want to buy $1 or $10 or $10 million, there needs to be a role or a pool of capital that allows that trade to happen. And these liquidity providers are serving that role. And the key point is that being a liquidity provider, it's quite difficult, and it's actually quite similar to selling options. You make a tiny sustained, continuous gains, and every once in a while, if there's a big move, you can lose a lot. And this is one of the founding point of Panoptic and perpetual options, is AMMs have two players, the swappers that want to trade, but also the liquidity providers. Swappers are just traders like they do on, again, New York Stock Exchange, but the liquidity providers, they actually create they trade in a way that is a lot like options trader. It's like how you manage an order book of options by selling options, and the risks, the way that you manage an LP position, the way that you handle the risks is actually quite a lot like an option. So we can unwrap this, but this is the key conclusion. I was an LP myself. I was doing it on V1, V2, and I ended up, V3 was the one that is a bit more advanced, that allows you to be a bit more specific as to how you provide liquidity. You can choose a range saying, I want to only help traders trade when the price of ETH is between 2,000 and 5,000, or it could be between 3,000 and 3,500. You can choose the range, and that makes it a little bit more risky, but that makes it a lot more like selling an option. You have asymmetrical risk, you have limited upside, unlimited risk. You can actually lose all of it, or even more depending on how you trade. And that role, which seemed to be quite simple to do at the beginning of DeFi, was getting more and more difficult. And we kind of recognize that link. Hey, liquidity providers are managing their position similarly. They should manage it the same way that an options trader should manage their positions.
That makes sense to me. And so as we're getting into Panoptic a little bit further now too, so perpetual options compared to traditional options, and maybe there are many differences, but the one main difference is that there's no expiration date. So is there anything else to build off of that to paint a picture of how they're different from each other?
Yeah, so no expiration date is the one that is the most shocking maybe to some people.
Yeah.
Because typically you choose a date first, and that's the beauty of options. You can bet on the price, but bet it with a timeline. A week from now, a month from now, or even years away in the future, depending on the underlying. So you always have this time component. And that's why it's also, you can be wrong in the short term, but right in the long term. So that time component works for you. You say, I want to take profits in 2 weeks as opposed to 2 minutes or 2 ticks. So that is one aspect. We do away with expiries. There's no expiries. You just create an option, you buy it, and you can hold it for as long as you want. And the way that we make this work is that normally if you buy an option, you pay up front. You pay $200, leaves your account. You have this option that you own. Maybe it's going to be worth a lot. Maybe it's going to be worth less or worth zero, but that $200 investment is gone from your wallet. In Panoptic, you buy an option, costs you zero, costs you nothing. But every day, every minute, every block, you pay a bit more. It's a pay as you go. It's a little bit like cell phone minutes back in the day. You use these minutes the more you wait. And at some point, if you have no amount in your wallet, you get liquidated. Or if you close your position after 2 days as opposed to 2 weeks, you just pay what you owe. But it's just slightly an incremental way of setting the price of an option. Start at zero and increases over time.
So if I'm buying it at a certain time and there's no expiration, so basically I'm agreeing that if this hits a certain price, then it doesn't matter if it's 2 years from now or 5 years from now, I can still sell it, or the contract is still going to follow through. There's just no timeline on when it will.
That is correct. Yes.
Wow. That's really cool.
It's a new way of trading. It's not clear. You have this long-term aspect of it. It works for the buyer's advantage in theory. You can hold this. You don't have to worry about. So maybe you pay a bit more for this. Maybe the price of that convenience of not having the unlimited time aspect means that you pay a bit more. So as a seller as well, maybe you get paid a bit more. So the market dynamics are a bit different, right, because the trade-offs are different.
I totally understand that. You're doing a great job, by the way, explaining all these things very clearly. So let's dive deeper into Panoptic. So let me ask you a question, because when I was doing research, I was a little confused on this. You're not working hand in hand with Uniswap, or are you? Is Uniswap one of your, is it like something that you depend on, or is this somebody that you're competing with? Can you explain that?
Yeah. So we are integrated with Uniswap. We depend on them in a way. Uniswap is that AMM, like the bigger AMM on Ethereum. They facilitate trades. They facilitate liquidity provisioning. What we do is that we made the interface a bit better for liquidity providers. We allowed people to enter a position in a slightly different way. And we don't care about swapping necessarily. We just want to cater to liquidity providers. So we kind of try to improve that. I mean, two roles, the swapper and the liquidity provider. The liquidity providers try to improve their UX if you want. And most liquidity providers are setting options. So we create the whole interface with an options mindset. But if you come in, you would sell options. These options will be liquidity provisions on Uniswap. And if Uniswap has a bunch of liquidity existing, we can just build on top. So we can kind of piggyback on $1 billion worth of liquidity that's already in Uniswap, because we can just live in the same ecosystem. The entry point is different, but the end state, which is liquidity going into the LP side of Uniswap, is the same.
Perfect. And who would you say is a good candidate to become a liquidity provider? I know it can be individuals, it can be institutions, it could be companies, but have you seen mistakes in that with people? Like, what are, I guess, some of the red flags here if somebody were to become a liquidity provider to start?
Yes. The key maybe point that makes a liquidity provider successful is you have to be a bit active. It's not a passive yield, which is, I deposit into a vault.
Right.
Token goes up, I make money. Yes. It has to be a bit more active. Because you're trading with options, you're actually doing something very difficult, which is creating an options and managing an options portfolio. So it's quite hard. So if you want to be passive, then there might be different opportunities. You want to be active, you work a little bit more, but you get paid for that work in a way. So you can be a lot more successful by being able to be managing your positions a bit more actively. That allows you to make a bit more returns. So that's kind of maybe the DeFi native way. All right. A lot of different activities on DeFi. You can lend in a lending protocol. You can trade in perps. You can be an LP. You can sell options. So this is kind of your spectrum of how active you want to be. But because this is an options, you can also look at what TradFi use cases for options are. And if you're a big company, if you're a Bitcoin miner, for instance, you can sell options as well to manage your risk. You can actually sell call options on, and a lot of Bitcoin miners are doing this, sell options on your future Bitcoin. So going back to that corn analogy, you want to secure a price maybe in the future. You don't know what it's going to be, but hey, I'm happy to sell that 125K 3 months from now. So you can create an option trade that will make this possible. Wow. And now you have Bitcoin miners, you can have companies, crypto liquid funds, could be even treasuries. You have a protocol that has a bunch of tokens. They can also use options to generate yield, sell at a more advantageous price. You can have now these use cases that now are passive because they serve a different purpose. It's for risk management as opposed to just pure speculation. So every company that has a token to some extent could be a LP or could be an option seller because it gives them something different. Gives them something different than just sell and maybe dumping the price.
Wow, I didn't know that about Bitcoin miners. That's actually really interesting. And it makes complete sense in them potentially doing that too. It is for sure risky too, but you have to, I guess, have a certain level of confidence in your Bitcoin mining for an extended time, So that was great. I want to keep capitalizing on Panoptic. Is there anything else or just anything that you want to talk about, the benefits, despite all the benefits for liquidity providers, like what makes your company stand out? Why should somebody come on board? What are things that you feel like maybe are misunderstood that you want to make clear? Just anything else that you want to share about Panoptic?
Yeah. So in our team, I'm a physicist researcher myself. And the way that we went about is almost like a discovery process. It's like a scientific expedition on DeFi. And we kind of discovered how LP positions are quite like options. And we are still like that. We have 3 people full-time doing research that try to demystify, try to showcase options, LP positions, DeFi positions in a way that is unique. So that we're still learning every day too. I don't know exactly all the answers yet. And then we just have this aspect being, let's figure it out. We can do baskets. It's a lot more easy to do in DeFi and blockchain because it's all public and transparent. We cannot even hope to do the same type of analysis on TradFi because the whole information is hidden. So a lot of what we do is research-based, kind of evidence-based in a way. We just want to see what the strategies are. We want to kind of analyze this in a way that is making sense. And that's kind of what drives the product development, the marketing, all aspects of the content that we produce. And to some extent, our research internally has shown some pretty interesting features, but the one thing that is maybe the bullish thing about the way that we do options is in a market, whether it's the New York Stock Exchange or the CBOE, the Chicago Board of Options Exchange in Chicago, most markets are quite mature and they're quite efficient. There's no juice left. There's dozens of entities trying to be arbitrageurs, try to kind of edge out any tiny sliver of profit. And FX markets, I'm sure it's even worse than that. But it's actually quite a tapped out market. You can be a small trader that follows the wave, but it's quite hard to extract value in those. What Panoptic allows is we open a new market, a totally new market. And what I mean by that is that if you provide liquidity in Uniswap, you're selling an option. And the risk, how you manage this is like an option seller. What we allow people to do is to buy an option by going short on an LP position. So you short an option that you sold, you can buy an option. And now you buy an option, you pay a price which is zero initially and increases over time as I described earlier.
Right.
But that price now is quite inefficient. You cannot buy options anywhere else besides Panoptic. So if you buy an option on Deribit, even the CME has options on Ethereum futures, it's tapped out. There's no juice left. If you buy it on Panoptic, so nascent, you can actually have quite a bit of upside because it's still a very new market.
Right. Yeah. And you want to know what? I love that you just said, just your honesty in this, that you're still working out understanding every single function and how this truly works, because that is a common theme, not only just in crypto and blockchain, but in fintech. It's about having humility and knowing that this industry is getting regulated in real time in a lot of different ways. So of course, that's what attracts a lot of people to it, is the excitement of what we're building and what we're innovating and in the world and how we're showing up in the world. So I just appreciate you for that honesty. I think that would build a lot of trust with your customers too, and people that are taking a chance on this with you, is that, in the crypto blockchain fintech space, we're still learning, we're still innovating, and we're solving problems as they come. DeFi's been around, but not to this extent. And actually, let me ask you, so I know you guys are on Ethereum. Do you have any like future expansion plans? Like, do you ever want to get on Solana, or are you guys perfectly content on Ethereum? What are your long-term goals, I guess? What are you trying to achieve?
Yeah, so being on Ethereum mainnet, which is expensive, slow, you cannot do exchanges on mainnet in a way because they're too slow. So for us, we made it work on mainnet, almost like planting a flag in the ground. Say, hey, we can work on mainnet, figured out all the trade-offs, figured out all the inefficiencies to make it work. And now we can go anywhere else. We were on Base. We can go on Base. We're on Unichain as well. Solana is a different ecosystem, but we could imagine going there as well. But the key point is that we made the tough decision of optimizing for mainnet. And now we can trickle down to the layer 2s, because if you start with a layer 2 that's fast, cheap, like quite easy to develop with, you can never go to mainnet. You cannot actually de-optimize it.
Right.
The goal is to make it work on mainnet, because to some extent, we were targeting also institutions a little bit, but if you're a large fund that handles millions of dollars, gas of $10, $50, even $100 is not going to bother you as much than a retail trader that wants to trade with $200 of capital. So the use case for options are a bit more on the sophisticated side. So that means that we can also make them on Ethereum, which is more secure, more liquid, and has more TVL than the other chains.
No, that's great. Yeah, so working out all the kinks on Ethereum, and Ethereum is kind of like the OG. I mean, even if it is a little bit slower, I think that's great, because then once you get onto all the other layer 2s, if they're faster, they're cheaper, they're easier to use, it'll be so much easier for you to expand once you have like this foundation set. You're right. Once you go to a more modern technology, it's going to be a lot harder to go back to Ethereum, for example. Are you guys trying to target certain people, or are you really trying to target the average user? Do you want more beginners? Like, I guess who would be your target market?
Yeah, exactly. So options are difficult, and if you don't have time, you probably have a day job too, so you don't want to spend like hours learning about options. What we want to do is create a vault-based structure, which is a little bit like an ETF, a little bit like a managed strategy, where you could also get exposed to higher yields, potentially by using options, while having you yourself being the trader. And that's actually very important, because it turns out that even some funds, again, treasuries, they want to have this management aspect to it. They don't want to hire someone internally. So a lot of what we do is to allow curators, to allow managers to run these strategies and have people participate to it. So you're no longer limited by how much you know about options, but rather you have to trust your manager, trust the strategies that are run. And again, you pay a fee for this, so you compensate them for their work. But you can also have a risk profile, which is different than lending protocols, which maybe cap at like 3% on ETH and maybe 5% on USDC and like 0.1% on Bitcoin. You can do a lot of options trade that allows you to kind of be a bit more higher on the risk curve. So institutions, retail, treasuries that don't want to manage their own portfolio is what we kind of launch next, which is that vault offering. And yeah, we're excited about this.
Yeah, and actually, I remember that you guys you had that in your outline. So can you explain that a little bit further? We had somebody on the podcast talk about vaults. They were doing like a hedge fund of vaults, for example. So what I guess can you explain the vault process? Like what is that and how is it innovative? Like how is it innovated, if that makes sense?
Yeah. So currently, the state of vaults, you have a lot of them. Lots of protocol do this. People are finding an advantage of having someone manage their funds for them.
Right.
You see a lot of this in Morpho or Euler Finance. A lot of these protocols, which are lending protocols, and you allocate funds to different lending pools. And maybe the Bitcoin has more returns, or the ETH has more return, or the USDT versus USDC. So the curation is just how you allocate these funds to extract the maximum yield on that lending activity. And some vaults allow something more complex than just interacting with lending protocols. Some vaults allow you to be an LP in Uniswap. Some vaults allow you to kind of extract, like deploy liquidity in different protocols. HLP, which is hyper liquid, you can become a market maker. You provide funds and capital, and they market make perps for you, which is something that no one should be able to be competitive with manually, certainly not. So
Right.
you can be exposed to these extremely high and sophisticated activities by using a vault. So in our case, our goal is to also be the connecting tissues with different protocols, but you can allocate funds to a lending pool. You can allocate fund into a liquidity position in Uniswap. You can also trade options with it. The key point is that you can now have more tools in your Swiss Army knife if you want. You can do more things with your vault, which is not limited to lending or market making. You now have options. One key point is that you can imagine if you have a loan yourself and there's a risk of being liquidated if the price of your collateral changes. However, if you buy an option, you can buy an option that will protect you, and you have a liquidation free loan. You can actually never worry about getting liquidated because an option is for this risk management purposes, allowing you to push away that risk to the upside. You maybe allocate 1% of your yield to the option, but you're protected forever, again, given the perpetual option.
I appreciate everything that you've said to explain your idea today, and truly you did a great job at explaining it. I think down to an idea of beginners somewhat that are familiar with Ethereum's ecosystem to understand what you're doing, and hopes draw curiosity towards it. So we talk about scams and fraud and schemes that happen and raising awareness. The first thing I want to ask you is, what do you think the biggest disconnect is in the crypto space? What do you think limits or hinders this space? It could be scams or maybe something else. What do you think the disconnect is?
I mean, the retail users probably are quite afraid of scams. We hear about them every day. And a lot of it was due to centralized exchanges, or FTX is one example. You put your funds into a platform that you think is secure. In that case, fraudulent behavior means that your money is gone. A lot of what we saw is that time and time again on chain, when you have your own keys, your own wallet, you have more control, and it's much harder to steal user funds this way. And that's kind of the best thing I can say to anyone that's on the fence is to do a lot of the trading yourself on chain with your own keys, so that you have a custody of your funds. It's not sitting in someone else's balance sheet. It's actually still yours. You can do a lot this way. But yeah, and most of what we see, and we are dealing with institutions who want to create a protocol that banks use, or hedge funds use, or even investors use. And it's still, we have to rein in maybe the fraudulent cases, even in on-chain it happens, but the next factor is how credible can we be, how secure can we be in the long term. For if you deposit $100, it's fine if the chain goes down, but if you do it with
Right.
$1 million, it's
Exactly.
actually not as good. Yeah.
No, it's true. It's true. And I appreciate that. We have had to get rid of a lot of bad actors in the space, but somebody made a good point that we experience scam and fraud in every industry, It's just because crypto is so new and it was unregulated, and then we were experiencing scam and frauds, that nobody was taking it seriously. I do think you make a valid point that on a lot of the centralized exchanges, you have to be careful about what company you're entrusting in. Hopefully now that we're experiencing more regulation, there probably is a little more trust with Coinbase, for example, if you were going to go on, because, we know that they've been to the White House and that they're somewhat of a trusted source still. But I think you make a good point. keep track of your own finances, trade on a DEX, for example, actually go on chain, and also do your own research before you make sure you know your public key, your private key, your digital wallet. Make sure you have all the information at hand that you need before you just go recklessly deposit like $10,000 and then run into issues down the road because you don't know your private key, for example. So, and I know that we were just talking before this that you wanted to talk about the scam that was on the news today. Let's talk about it.
Yeah, this was not a scam, but an exploit.
Okay.
And I want to preface this. So we're Panoptic. We did audits. We have the whole protocol, the smart contracts, if you want. We write code and people have to audit, make sure it's secure. Went through multiple audits. And we had a bug bounty, which is if anyone finds any vulnerability, we're going to pay you. And it was $250,000. And it turns out we had to pay out that bounty. Someone found a critical flaw in our smart contract. So despite spending a lot of money on the audits, these things happen. And the bounty worked in a way. We made it so that it was more beneficial to disclose the vulnerability than be on the run forever because you hacked the protocol. So that is what people should do, what protocols should do. If you see a protocol that is not audited, has no bounty, you don't know who the founders are, sometimes it's quite risky. We definitely made it so that there was a lot of guardrails with the audits, but also that audit and the bounty helped. Currently, we're rebooting for V2, so we're not live yet. But that bounty meant that we had to fix our protocol. We actually formed a white hack. We stole our own users' funds to secure them from anyone else. And now people can claim them. And we're more than 3/4 of the way through of people claiming. But that is part of the deal. We managed this the best we could. But the key point is that the bounty worked. We were able to put money up front to say, hey, you see a vulnerability. We can compensate you for that finding in a way that will not impact our protocol. And today, Balancer, which is one of the OG protocols, I think it launched in 2018 or 19, but it's an AMM. It's also similar to Uniswap. It does things a bit differently, but it's the same class of protocols where you interact with the protocol. Quite permissionless, quite decentralized. The contracts that were launched 5 years ago got hacked this morning. So that meant that for 5 years, you had this vulnerability that was exploitable, possible in the open, and took 5 years for someone to. So they probably had a bounty, they probably had all the audits done, but the attacker kind of did what they did. So they were able to steal, I think it was probably more than $100 million worth of funds. So it's shocked people a little bit. People say, hey, I trusted Balancer because it was live for so long. And the more you wait, the less likely it is for vulnerability. So all the protocols we talk about, Maker, Uniswap, Balancer, all these OG protocols, to some extent are maybe reconsidering how secure they are because who knows? So that is one of the things that kind of shook people a bit to the core this morning because you never know. And in the case of Balancer, it's unfortunate. I don't think they are, I think they are adversarial, so they won't return the money. I don't know. But it's quite hard. Sometimes it could be North Korea, it could be a different entity, but it's quite hard to predict these things.
No, 100%. And you're right. We do experience a lot of scams from North Korea, a lot of hacks from North Korea. That's a known statistic out there. But I didn't hear the news today, so I'm glad that you covered that. I mean, we probably would have covered it in the news that we post before our guest speaker. But yeah, no, it just goes to show it doesn't matter how long you've been in the space. It doesn't matter how well known you are. I think the bounty programs that you were talking about, we've covered that before on the podcast. I think those are always worthwhile. And it just goes to show that you are doing everything you can to protect your company from the illegitimacies that really, really hurt the crypto, blockchain, fintech spaces. So, of course, you can't prevent scams from occurring. I mean, I'm saying as in people that do them, but you can by hiring people and looking for flaws within your company, looking for these breaches and staying ahead of them. I think, that's great.
And one thing I want to add is that this bounty also allowed us to buy up time because we got the bounty and we performed the hack 4 days later. So during these 4 days, we were able to reach out to our community, to our liquidity providers, those that we know, and then more than 80% of the funds were withdrawn by people voluntarily. And no one said a word. So it was kind of kept tight-lipped. More than 100 people knew, if you want, that the protocol was not under attack, but vulnerable. Right. And by the time we got everyone out, we were able to also rescue the remaining of the funds. So it also put a positive light on this, because people that we messaged that were looking in our Discord messages also withdrew but did not say anything, so that it was kind of contained in a way. So again, the best thing we can hope is to never happen, but when it does happen, this is kind of, I'd say, the bounty. People making sure you perform this in an open and transparent manner is the best way to do this.
No, yeah, Guillaume, the way that you guys went about that was perfect. You know, staying honest and transparent with your customers, protecting them from potential vulnerability. I mean, anybody that gets involved in the crypto space knows that this is a possibility. So they have to go into any platform, any D-app that they're using, understanding that this is a risk at the end of the day. The ways in which that you practice business is admirable, and you have a lot of integrity, and in return that's going to help the business in the long run. And that's also really why I wanted to bring you guys on. I think it's so important to talk about these things. And, you know, of course, some people don't want to talk about it because it might hurt their business, or they think that their customers won't trust. Honestly, I think that coming on and talking about these things and fighting them and addressing them and learning how to overcome them is what's going to draw more people to trust your company. I want to say thank you so much, Guillaume, for coming on to the podcast and sharing everything that you did. I'm going to have all your resources listed below, how people can get in touch with you, which we'll talk about after this. Panoptic website for anybody that's interested. X too, we'll share that. So if anybody is curious in getting involved in this that's listening, we'll make sure you have all the correct resources. Is there anything left, any last pieces of advice or anything left that you want to share with people before we head out?
No, again, look into options. DM me even personally, go on our Discord. We try to be very helpful. We want to onboard users to kind of this other aspect of finance. And at the end of the day, we're doing live streams as well. We're doing podcasts. We try to make it accessible. So research to demystify the options world, but also we try to communicate this and make it quite easy. So actually, I was teaching Rosalie, a woman from marketing at Panoptic, how to trade options, and she was trading meme coins, and we was able to convert her to be a full options trader. So again, same thing with you. If you need to learn a thing or two, I'd be happy to teach you, because if you come in from a trading background, could be FX in your case or just pure trading, you'll see there's a lot more depth and nuance to options. So you can still use the same signal, the same entry points, but you have a different type of trade that, again, allows you to be still profitable if you're wrong, or at least manage your risk a bit differently. So all of what we do is try to onboard as many people to the world of options. And again, want to make it accessible to reach the users.
Yeah, and actually, let me mention before you go that on your website too, you guys have a lot of YouTube videos that explain these kind of concepts. So I really want to emphasize that, because it is a completely new thing that, I mean, you know, I did FX trading, but options is you're right, it's like a second level of, you know, it's just the second floor of the office building. So you guys have a lot of YouTube videos for people that want to watch, and also Guillaume is more than willing to teach people, which I think is awesome, because you don't get that a lot from companies. So you really truly value what you do, and you're trying to open this movement to more people, and it really does show. So thank you so much for your insights. Again, everything will be listed, and make sure to check out Cryptic Humility next Monday for your weekly news and our next guest speaker. Thank you guys.